Why does it seem like the Millennials and Gen Z are in a constant battle with their finances? Is it harder for them than it was for previous generations? Welcome to our deep dive into the economic realities of the younger generations. We're living in a world far different from the one our parents and grandparents encountered. The financial landscape has drastically changed, and Millennials and Gen Z are grappling with unique challenges that are reshaping their economic futures. Let's put this in perspective. Today we have Gen Z individuals facing financial hurdles with lower earnings, higher debt, and increased delinquency rates compared to Millennials at the same age. Factors contributing to their financial strain include inflation, high borrowing rates, and elevated living costs. It's not just about paying the bills anymore, it's about navigating a complex financial system where the rules of the game seem to be constantly changing, but it's not all doom and gloom. Despite these challenges, these young individuals are finding innovative ways to manage their finances. They're exploring personal loans for refinancing, keeping a keen eye on their spending, and learning to live within their means. They're also leveraging technology, with fintech apps like Vola Finance, to improve their financial literacy and manage their finances better. But is it really harder for these younger generations than it was for their predecessors? To answer that, we need to take a step back and look at the economic conditions of previous generations. We need to understand the financial landscape they navigated and the challenges they overcame. So, join us as we delve deeper into the economic conditions of previous generations to gain a clearer picture. Let's journey back in time and see how the baby boomers managed their finances and how their experiences compare to the financial realities of Millennials and Gen Z today. The baby boomers, those born between 1946 and 1964, experienced a very different economy. It was a period characterized by economic prosperity and stability, a stark contrast to the financial landscape faced by Millennials and Gen Z today. Let's take a step back in time. The baby boomers grew up in an era of post-war economic growth. Industries were booming, jobs were plentiful, and wages were high. In fact, the average income in the mid-20th century was enough for a single wage earner to support a whole family comfortably. The cost of living was also significantly lower during the baby boomers' early adulthood. The prices of essential goods and services like housing, healthcare, and education were within reach for most people. Entry-level jobs and part-time work often paid enough for young adults to pay for their tuition, rent, and other living expenses. Moreover, the baby boomers had easier access to credit. Mortgages, for example, were more accessible with lower interest rates and longer repayment periods. This facilitated homeownership, a key aspect of the American dream. Credit was not just about buying homes, it was also about starting businesses, investing in education, and improving one's quality of life. But it wasn't all rosy for the baby boomers. They too faced challenges such as economic recessions, inflation, and market crashes. However, these were arguably less severe compared to the financial crises experienced by later generations. It's important to remember that the economic conditions during the baby boomers era were shaped by several factors. These include large-scale industrialization, technological advancements, and significant policy changes. The post-war economic boom, for instance, was largely driven by massive public investments in infrastructure, education, and social safety nets. In this context, it's clear that the baby boomers had certain advantages that later generations lack. They benefited from a thriving economy, higher wages, a lower cost of living, and easier access to credit. These conditions gave them a strong start in life and set them up for financial success. Now let's compare this to the financial landscape that Millennials face. Millennials, born between 1981 and 1996, entered a significantly different economic environment. This generation, often dubbed as the student debt generation, encountered a landscape painted with higher costs of education. As college tuition soared, many Millennials found themselves burdened with student loans. In fact, the total student debt in the United States is nearly $1.8 trillion, with a staggering 92% of that amount comprising of federal loans. The cost of housing also presented a significant hurdle. With property prices on the rise, the concept of homeownership started to seem like a far-off dream for many. Mortgage rates, which are crucial in determining the affordability of homes, doubled from 3 to 8% in a short span of time. This rapid increase exacerbated the financial difficulties Millennials were already facing. The cost of healthcare, another critical aspect of living expenses, also saw an upward trend. With the escalating costs of medical insurance and treatment, maintaining good health started to take a hefty toll on millennials' wallets. But the challenges didn't stop there. The Great Recession of 2008 left a lasting impact on the job market, leading to instability and insecurity. Many millennials fresh out of college were greeted by a lackluster job market, making it challenging to find stable employment. Those who managed to secure jobs often found themselves earning lower wages compared to what their parents made at the same age. The cumulative effect of these factors has left many millennials struggling to save for their future. The uphill battle they face in managing their finances is real and far from over. Yet, amidst these challenges, millennials have shown resilience and adaptability. They have embraced technology to find innovative solutions, from budgeting apps to robo-advisors for investments. They've also shown a preference for experiences over material possessions, a shift that has influenced their spending habits and lifestyle choices. But if you think millennials had it tough, wait until you hear about Gen Z's financial challenges. Generation Z, born from 1997 onwards, is now entering adulthood amidst a myriad of financial hurdles. These hurdles are not just mere stumbling blocks, but rather towering walls that can seem insurmountable. Let's start with the elephant in the room: student debt. Higher education has always been seen as a gateway to a brighter future. But for Gen Z, it's a gateway that comes at a hefty price. The total student debt in the US is approaching a staggering $2 trillion, with federal loans accounting for more than 9/10 of that amount. The rising cost of education has compelled many Gen Z individuals to take on these loans, shackling them with debt before they even step foot into the world of employment. Speaking of employment, the job market hasn't been particularly welcoming either. The COVID-19 pandemic has dealt a devastating blow to the global economy, and Gen Z has borne the brunt of it. With businesses closing down and layoffs becoming common, finding a job, let alone a well-paying one, is no small feat. Many Gen Zers are now juggling multiple jobs just to make ends meet. And then, there's the housing crisis. Rising property prices have made home ownership a distant dream for many in Gen Z. To put it into perspective, mortgage rates have doubled in a short period, from 3% to a whopping 8%. This, coupled with lower earnings, has made it increasingly difficult for Gen Z individuals to afford housing. In fact, 1/10 of Gen Zers doubt their ability to ever own a home. But it's not all doom and gloom. In the face of these challenges, Gen Z has shown remarkable resilience and adaptability. They're harnessing technology to improve their financial literacy and manage their finances. Apps like Vola Finance are providing tools for credit building and budgeting assistance, helping Gen Z navigate the choppy waters of personal finance. The financial struggles of Gen Z are not just a reflection of their individual choices, but rather, they are a byproduct of broader economic trends and circumstances beyond their control. High inflation, rising living costs, and stagnant wages have all contributed to the financial strain experienced by this generation. It's clear that the financial landscape has shifted significantly over the generations, but what can be done about it? While the economic challenges are daunting, there are strategies millennials and Gen Z can employ to navigate this tricky landscape. The first step in this journey is understanding and acknowledging your financial situation. Let's dive in. Managing credit card debt is an essential first step. It's easy to fall into the trap of using credit cards as a crutch, but this can lead to a cycle of debt that's hard to break. Instead, consider using credit cards sparingly and always aim to pay off the balance in full each month. If you find yourself in credit card debt, create a plan to pay it off. This might involve consolidating your debt onto a card with a lower interest rate, or seeking the help of a nonprofit credit counseling agency. Next, consider personal loans for refinancing. If you're juggling multiple sources of high-interest debt, such as credit cards or student loans, refinancing could save you money. By taking out a personal loan with a lower interest rate, you can pay off your existing debt and then focus on repaying the loan. Keep in mind, though, that this strategy requires a good credit score and stable income. Spending within your means is another crucial strategy. It's about creating a budget and sticking to it, prioritizing needs over wants, and saving for the future. Remember, it's not about denying yourself of every little pleasure, but about making conscious decisions about where your money goes. Now let's talk about financial literacy. In an age where inflation and borrowing rates are high, and earnings and job security are low, understanding the basics of finance isn't just helpful, it's vital. Financial literacy includes knowing how to create a budget, understanding interest rates, and being aware of the impact of inflation on your savings. There are plenty of resources out there to help you boost your financial literacy. One such tool is the Vola Finance app. This fintech app aims to improve financial literacy by providing tools for managing finances, including credit building and budgeting assistance. It's like having a financial advisor in your pocket, offering insights and advice tailored to your unique situation. Investing is another crucial aspect of financial literacy. Starting early and prioritizing financial goals can help you benefit from compound interest over time. Investing doesn't have to mean buying stocks or real estate. It can be as simple as putting money into a retirement account or an emergency fund. While all of this may seem overwhelming, remember that you don't have to do it alone. Seek advice from financial advisors, use online resources, and learn from the experiences of others. And remember, the path to financial stability isn't a sprint, it's a marathon. It's about making consistent, informed decisions over time. The path to financial stability may be tougher for millennials and Gen Z, but with the right tools and strategies, it's not impossible. You have the power to change your financial future. It starts with taking that first step, no matter how small, towards understanding and managing your finances. And remember, every journey begins with a single step. The financial struggles of millennials and Gen Z are a reflection of the changing economic landscape. As we draw this discussion to a close, let's take a moment to revisit the main points we've covered. We've seen how the economic conditions that baby boomers enjoyed have shifted dramatically for millennials and Gen Z. Lower earnings, higher living costs, and a significant increase in debt levels have become prevalent issues for these younger generations, not to mention the added pressure of an inflated housing market and the burden of student loans. The financial landscape for millennials and Gen Z is indeed a challenging one, but as we've discussed, it's not all doom and gloom. There are tools, resources, and strategies available to help navigate these financial hurdles. Fintech apps like Vola Finance are stepping up to provide support in building financial literacy, managing finances, and creating budgets. Now let's consider the potential long-term effects of these economic challenges on our overall economy. It's no secret that the financial health of individuals directly impacts the larger economy. When individuals struggle to make ends meet, consumer spending decreases, which can slow economic growth. Moreover, the high levels of debt carried by millennials and Gen Z can lead to increased delinquency rates, further straining the economy. This is where the importance of policy changes comes into play. Initiatives that promote financial literacy, provide debt relief, and address the high cost of living can go a long way in easing the financial burdens faced by these generations. Policies that make housing and education more affordable, for instance, can significantly improve the financial health of millennials and Gen Z, and by extension our economy. But remember, it's not just about waiting for policy changes. As individuals, we have a role to play as well. Building good financial habits such as saving, investing, and managing debt can help secure a more stable financial future. Starting early and prioritizing financial goals can also have a significant impact in the long run, thanks to the magic of compound interest. While the financial struggles faced by millennials and Gen Z may seem overwhelming, remember that every generation faces its own unique challenges. The key is to adapt, learn, and navigate these challenges to pave the way for a better financial future.